Hey everyone, thank you for joining this workshop by Across Restaurant Consulting. I'm joined by 𝗶𝗺𝗽𝗍𝗃, CEO of Across Restaurant Consulting, the go-to guy for all things financial management operations in restaurants. With his experience in helping restaurant business and level up their game, I'm heading over to 𝗶𝗺𝗽𝗍𝗃 now. Yes, 𝗶𝗺𝗽𝗍𝗃.
Thank you so much for the introduction. Hello, everyone. Thank you for your time and listening to this workshop. So today we will be talking about getting good visibility into the operations to manage operations effectively. I have this analogy of managing a restaurant is like flying an airplane. What you need to fly and land an airplane is a good visibility, good radar, seeing what is ahead of you and positioning the aircraft or your restaurant in this analogy. To get good visibility, you need very good accounting. Today, we are going to talk about how to get good accounting to manage your business. Accounting, to the most part in the industry, is considered something for tax purposes. Nothing can be further from the truth. The purpose of accounting is to track transactions and giving you visibility on what is happening in the business. So that being said, let's proceed. A little bit about myself. I started my career in public accounting, worked 10 years in public accounting. Before I started Across, I was the CFO and corporate representative for Steakhouse and successfully set up all financial operations of the business. I founded Across because I saw the need for better representation of accounting and finance departments in the industry. So today we will cover accrual-based accounting, cash-based accounting, why accrual accounting is better than cash-based accounting. Accrual accounting, it means that recording revenue when earned and expenses when incurred, not when cash changes hands. On Monday, say $10,000 of revenues, 80% of this would be paid via credit card. You would receive this $8,000 on Wednesday or on Thursday, somewhere around there. If you were to do cash accounting, you would record this $8,000 between Wednesday and Thursday. There will always be a difference between the revenue your POS shows and the revenue per accounting. Cash accounting, in this sense, for revenues, would not make much sense. If you think about you are recording most of your Monday revenue on Wednesday or Thursday, it would mean that you are recording your Sunday revenue to the next week. Now, this is even more important for the expenses because there is a bigger time difference when expenses are paid. You receive cost of goods sold, the stuff that you will sell at the restaurant, the carrots, the meat, the shrimp on Monday, you'll probably pay this 3 weeks later to the distributor. That expense you incurred on Monday, you probably used on Tuesday or Wednesday, will be recorded as an expense 3 weeks from that period, right? How would you match the revenue and the expenses in that case? Because understanding and making sense of expenses is through correlating them with the revenue earned. You incur these expenses to earn revenue. And if you can't make sense of your expenses, then how are you going to manage them? It will be impossible. Cash accounting doesn't give you the visibility to manage your expenses, right? Given that you have less tools, less control over your revenue than the expenses that you incurred. You can't change how many people visit your restaurant in the short term. Maybe you can make more of an impact on the long term, but you can have an impact on the expenses in the short term. To have control, number one, you need to understand what is happening in the first place. So cash accounting creates fog and making sense of the expenses almost impossible in this manner. So some might say that we are looking at this on an annual basis, right? So in the annual basis, those time differences may not make too much of a difference. But I would say to have any impact on the expenses, and these expenses could be, cost of goods sold or your operating expenses, to have a control over these and optimize these expenses. You need to see this on a short-term basis, understand what is happening, and then make changes. That's why accrual accounting will allow you to see these things on a timely basis when they are happening almost real time and make an impact. According to a study by the National Restaurant Association, restaurants using accrual accounting have 20% better visibility into their financial health compared to those using cash-based accounting. It's not just me who's saying accrual-based accounting is superior. I will touch base on many studies that point out that accrual accounting is better for your restaurant. Another metric is a survey conducted by 𝗿𝗺𝗀𝗺𝗁, which is one of the big four accounting firms. They found that 78% of restaurant owners using accrual-based accounting believed it helped them make more informed business decisions. Accrual accounting also helps you with enhanced cash flow management. American Institute of CPAs, AICPA, states that accrual accounting enables restaurants to anticipate cash flow fluctuations more accurately. And we will touch base on why that is the case. Accrual accounting facilitates accurate profitability analysis. I think this is one of the most important things here. A survey by Restaurant Finance Monitor reported that 62% of restaurants that switched to accrual accounting reported improved profitability analysis. We touched base on, by the virtue of recording your revenue and your expenses to the same period, right? You can make sense of them and you can analyze them. If your revenue is recorded, say like 3 days later, but your cost is recorded 21 days later, then how are you ever going to match one with the other, make sense of it, and analyze it? You can't, it's impossible. Accounting helps increase efficiency in inventory management, and this leads to reduced waste and improved cost control. The other benefit is easier tracking of accounts receivable and payable. Again, we touched base on recording everything as earned and incurred. According to a survey conducted by Restaurant Business, restaurants using accrual accounting experienced a 15% reduction in outstanding accounts receivable and payable compared to those using cash-based accounting. Why is this the case? To do accrual-based accounting, you have to have a fundamental understanding of the business, because you are recording something that you know has happened, but it hasn't hit your bank account yet. Accrual-based accounting is a more sophisticated form of accounting. The accountants who can do good accrual-based accounting know what is happening in the business and accounting them properly to the correct periods. And thus they know what is out there, what is happening, and what's going to happen. Think about in cash accounting environments, credit card company didn't deposit one of the batches. In cash-based accounting, you don't know this because you record what is out there, right? And that transaction didn't happen. Revenue you earned hasn't hit the bank account. So cash accounting wouldn't know to go to the credit card company and ask for batch to be deposited, right? Another example from the expense side, think about like the receiver didn't forward the invoice to the accounting department or didn't record it to the operational system to be recorded in the accounting system. In cash-based accounting, you wouldn't pay this transaction, you wouldn't be aware of this transaction. So your costs will be lower than what they would have been, right? You wouldn't know the outstanding payables. Now we go from inside the company to outside the company, the third parties that we interact. Accrual accounting is the basis of US GAAP, and providing GAAP financials to third parties, whether these are investors, the bank, or any other third parties that we interact with, ensure consistency and transparency in financial reporting, enhances the investor confidence. There is a study published in Journal of Applied Business and Economics found that restaurants using accrual accounting had higher valuation multiples and were perceived as more attractive to investors compared to those using cash-based accounting. Because cash accounting comes with a fog. If the accounting department is not as sophisticated as they want it to be, they will value it less. That's number one. Number two is the fog. So they are putting a discount on the fog. And the trouble that can come by not fully understanding what kind of liabilities that could be out there. Because accrual accounting records your liabilities to today. Cash accounting does not. Investors would find that cash accounting coming with this fog can cause them headache in the future because liabilities could come after the transaction is closed. Improved loan eligibility. Third parties always would prefer accrual accounting to cash-based accounting. Again, the banks and other financial institutions would give more credence to accrual to restaurants with accrual-based financial statements, and loan eligibility would increase for those companies. And finally, industry benchmarking and performance comparison. Benchmarking financial performance with others in the industry is an important performance indicator for the business, and it wouldn't be possible for you or the investors or the banks to determine the performance of your restaurant compared to others in the industry. This important analysis is also taken away from your hands. In a nutshell, why all restaurants should apply, whether they are small or large, accrual accounting compared to cash accounting. This is what I wanted to present. I would love to take the audience's questions.
Yes. Just waiting. Yeah. Ufuk, you said good accrual-based accounting. What do you mean by that? Good accrual-based accounting.
Good question. If there is a good, is there a bad accrual-based accounting? Although there is like one form of cash-based accounting, there is a degree of, accrual-based accounting. In accrual-based accounting, the accounting department would need to have an understanding of the operations and what is out there, right? Basically, two things contribute to this. Number one, the overall knowledge of the business of the accounting department, so that they can anticipate what is out there. And the second one is the financial controls that would help accounting department to achieve good accrual accounting. Good means that you have close to full accrual-based accounting, that the company does account reconciliations with the vendors, bank reconciliations on a daily basis to make sure all credit card receivables that should be received has been received and in full. Credit card company didn't shortchange anything. There is a degree to which accrual-based accounting is applied. There aren't significant unrecorded liabilities.
All right. How does financial control affect accrual-based accounting to manage your business?
That's a great question. So, financial controls are the things that a company does, part of the processes to ensure everything works the way that it's supposed to work, like checks and balances, whether these might be, vendor account reconciliations or inventory counts, whether these are bank reconciliations, review of payroll, anything that is a review or checking something with something else is a control, right? So good financial controls aid in accrual-based accounting to make accrual-based accounting better. Like, think about this example. Receiver received the goods, but he didn't send the invoice to accounting departments, right? So what is going to happen? If there is not a control to do vendor reconciliations before financial information is sent, then cost of goods sold for the period will be less than what it needs to be. That invoice for the purchases won't be recorded for the period, and that's going to reduce the cost of goods sold. When the distributor notifies the company there is an unpaid invoice, they will then realize that that invoice wasn't sent, wasn't recorded, so they will record that invoice to the other period, in which case you will have one period of understatement of your liabilities and another period of overstatement of your liabilities. So your food cost should be 27%. In 1 week, it will be 26%. In another week, it will be 28%. Skewing the results. How will you manage your business, making sense of this information and hold the operations accountable in that environment? It will be very, very hard if you don't have adequate financial controls to have consistency in applying financial controls, in getting financial results and managing your business. That's why good accrual accounting is what we need, not bad accrual-based accounting, because the worse the financial controls are, the less consistent information you will receive from the accounting and finance department, and the less visibility you will have. When I was an operator, I spent significant bit of time in the back of house, seeing the processes, seeing what's happening, whether this relates to, like workers' comp, HR, or as it pertains to, processing of the food, seeing like how it's done, how are different people doing it across our different restaurants, and to understand whether there will be something unexpected happening, whether with the products that we purchase. But one operator can only see this in one restaurant at the period that they are over there, right? Even then, you don't have visibility into the purchase price of the said product that's being cooked in the back of house. Accounting gives you the fullest picture, and I'm not saying like the information accounting provides negates the necessity to spend time in the back of house, but one supplements the other one. You need to do both of those. You need to understand what's happening on the ground as well as what's happening in the big picture sense, combination of all of the transactions. And if accounting does a good job, provides you with good accrual-based accounting, you will get as complete of a picture as possible so that you can take action on a timely basis.
Okay. And Ufuk, how would an operator know if their accounting is good or not?
Yeah. So what I would ask to the accounting department to understand whether they are doing a good job or not so good job is, number one, are we doing accrual-based accounting? So whatever the tax basis is, financial statements could be prepared in accrual-based. Because just because the tax base is cash basis, it doesn't mean that financial statements can't be prepared in accrual basis. Number one, this. Number two is, what kind of a financial reporting are you receiving from the accounting department? People tell me Toast has good reporting. No, it doesn't. It has some reporting, but in order to get to the level that you need to manage your business, you need to combine many different reportings. Do you really have the time for that? I mean, I think it would take like 30-40 minutes to make sense of like 1 week versus another week. The accounting department should provide you a snapshot of certain information, whether this is, off-premise, on-premise, or food cost versus like food revenue, beverage revenue, beer, wine, all that kind of details. Revenue divided by the locations like dining room, like bar, patio, all that kind of stuff. Or from an expense standpoint, you should get the prime costs on a regular basis. Prime cost meaning cost of goods sold and labor cost. The details as to like the food cost divided by food revenue and all of the other beverage components divided by their own revenue. And if there is significant fluctuation on these ratios, say your food cost is 26% one week, 29% another week, 24% the following the week after. I mean, how often do we see a significant fluctuation in the mix that we sell, right? Not so much, in my opinion. So if your costs are fluctuating that much, it would mean that something that should happen isn't happening, meaning the financial controls and the accompanying accounting records are probably not too good. And like the matching principle between the revenue and the cost associated is not working out in the accounting departments. So those are the things that I would look at. Part.
Awesome. Thank you, Ufuk.
Do you have any other questions, Part?
Not on my list. No.
Okay.
Right now.
I would like
you want to emphasize anything about this topic more?
I just want to tell the folks that as I'm a CEO of my business, right, I don't expect me to know everything about everything. So just like many of you are operators, right, you don't have to be an expert in accounting, financial reporting, in the topics that we covered. That's why this is a specialty on its own. If you would like to chat on your operations, I would love to hear from you, as I do from so many. Please don't hesitate to reach out to me on LinkedIn or from our website, www.consultingacross.mu. One more thing I would like to say is that we have a series of workshops, podcasts. We started this week. There will be one on July 27th with a very good operator and consultant, Scott Turner. I'm looking forward to that. I really appreciate everyone's time and listening to this, and looking forward to hearing from you.
Thank you, Ufuk. Thank you guys for joining in. Let's meet on the next workshop.
Thank you very much.